Hello, and welcome to the February 2021 Economic and Market Update from Commonwealth Financial Network. My name is Brad McMillan. I'm Commonwealth's Chief Investment Officer. After a strong 2020, markets took a pause in January. Most developed markets were down slightly, including the Dow and the S&P 500 here in the U.S., as well as the developed markets abroad. The riskiest assets did the best, led by the NASDAQ and by emerging markets, with both showing gains. All markets saw turbulence toward the end of the month, on fears about more contagious variants of the COVID virus starting to spread. This was offset by the possibility of more stimulus from the federal government, but called into question some of the more optimistic medical projections. While markets clearly still expect continued improvement, they are starting to take more risks into account. On the medical front, as we start the year, the third wave appears to have crested. Infection growth is down, as are positive testing rates, and hospitalizations have fallen significantly as well. Vaccinations are proceeding rapidly, with almost 10% of the population having had at least one shot. The major outstanding medical risk is that more contagious strains of the virus could cause another rise in cases, but for the moment, the trends are quite positive across the board. On the economic front, though, the news wasn't as good. We continue to see damage, with layoffs still high and retail spending down, but here too there are signs of improvement. States are starting to reopen, layoffs have declined for the past 2 weeks, and the federal stimulus payments are hitting bank accounts. With all of that, we're now seeing consumer confidence start to recover. And this has also boosted the higher frequency spending data. While risks remain, here too, we may well have seen the worst of it. And this is clearly what markets are expecting. Despite the weak January numbers, markets remain near all-time highs. Markets look forward, not back, which explains the continued rally and is a positive sign for the rest of the year. While risks remain, with the rapid expansion of vaccinations, they should be relatively contained. And over the next couple of months, the medical news is likely to continue to get better, and the economic news should follow suit. The economy has been very resilient despite the third wave, and the signs of a rebound we now see should continue as states reopen and as the fiscal stimulus helps confidence and spending power. Most analysts see the pandemic coming under control by the second half of the year, and that would support an accelerating economic recovery. And that's actually what the markets are seeing. While we'll likely see more volatility in the news and in the stock market, especially in the short term, over time, the prospects are good. As we move into the year, risks are still very real over the short term, but there's reason to believe that past that, we'll get to a much better place. While the pandemic is still with us and a more contagious version of the virus might still appear, for the moment, we're through the worst of it, and vaccinations will help to contain any future risks. On the economic front, the stimulus checks have removed much of the immediate concern and allowed growth to keep going while vaccinations proceed and the economy reopens. This should get us back to something like normal within the next several months. And again, that's what markets are seeing. While last year ended on rising risks, this year it looks like those risks are declining, although we do still have a couple of months to go. That's it for this update. Thanks for watching. Join me in March for the next monthly update, but until then, be sure to check my daily blog, The Independent Market Observer, for more timely comments. Stay safe, stay sane, and stay healthy. We are getting through this together.